Our Stonebridge Asia practice team have had a very busy last few months, and I think it started from about May this year, where we saw a run of properties up until now, which have all been selling to Asian investors. I look back at some of the statistics from January to about April this year, and about 19% of our team's properties were selling to these Asian investors. But since May, we've had this run, and I think the last 12 properties that our team have sold retail-wise have sold to Asian buyers. If we look deeper into the background of some of these buyers, it's not as if there's this new wave of capital which has come in. No, but I think the reality is a lot of these buyers have been in the market for the last 12 months or the last 18 months, but they've been the underbidder, the third bidder or the fourth bidder, and they just haven't been successful in finding the right property for them. But in the last few months, I think due to market conditions, pricing expectations have come off, and we've just seen that layer of Asian capital ready to pounce to buy a lot of these properties. The trend that we're noticing amongst these Asian investors at the moment is they're like well-located properties, long leases, blue chip tenants, and a lot of the asset classes which we've been selling include shopping centres, supermarkets, childcare centres, medical centres, and petrol stations. I think what's interesting to note with a lot of these offshore Asian investors at the moment is they're less reliant on debt, and a lot of the properties they're buying more heavily geared to equity, or they're just borrowing less to invest in some of these commercial properties. If you take an example with several of these childcare centres our team have recently sold. We've recently sold 2 childcare centres to first-time Chinese investors, and both of these investors never came to me and said, "Kevin, I'm looking for a childcare centre investment." No, the conversations are normally along the lines of, "I've got 8 mil, I've got 15 mil of equity, what type of properties can I buy?" Historically in the past, they would have thought, okay, let's borrow 50% from the bank and let's buy something 20 mil, 25 mil. But what we're noticing is with some of these investors is they're becoming more risk averse, and they'd rather say, hey, instead of buying a bigger property, let's just buy something all with equity that is less reliant on debt because I'm concerned with where the market is. And they're happy to pay a sharper return because they're buying a $8 million childcare centre or a $9 million childcare centre. They're able to accept the yield where traditional buyers who are more reliant on the cost of debt wouldn't be able to. As you've probably seen, we sell a lot of your larger shopping centre transactions, which could be 30, 40 or 50 mil plus. But off the back of this, we've built a very strong database where we've had high net worth or ultra high net worth Asian investors looking for these assets, but they're now readjusting their profile and saying, hey, instead of buying a larger shopping centre, let's just buy something for 20 mil or 30 mil, very similar to what we've just recently witnessed with the Woolworths Lewis shopping centre sale. That property was sold to a first-time Chinese investor for a bit over 20 million, and it's sold on a passing yield of 5.67% yield. The investor was ultimately attracted to this property because it was relatively new, had long lease, and the majority of the income was secured by Woolworths. I think the other big thing to mention as well is the eventual purchaser of the Woolworths Lewis shopping centre was sourced through one of our social media marketing strategies. A big focus for our Asia practice business is finding new investors and educating them to the Victorian investment market. And this particular buyer, he came to us through one of our online video promotions about Woolworths and supermarket investments. And off the back of that, we spent a lot of time in educating him, and eventually he's ended up buying a Woolworths shopping centre. On the bigger end of the scale, we're noticing a lot more Asian syndicates or Asian funds are being created where a group of investors are coming together to buy larger assets. We're seeing a few of these groups more educated in especially the retail sector, and they're coming to us and saying, hey, we've got a few of us that have come together and I want to buy a larger shopping centre, something with a bit of value add where I can get healthier yield compared to a smaller private investment opportunity such as a neighbourhood shopping centre, and looking more into the sub-regional shopping centre space. In terms of forecasts for the remainder of 2024, we believe there's still a lot of Asian capital to be deployed. Currently, we've got a lot of active campaigns which are closing in the next couple of weeks, where majority of the top few bidders are of Asian heritage. So we believe this trend of Asian buying will continue as there's a lot of unsatisfied capital looking for a home to go into. A common conversation amongst the Asian investors at the moment are they're thinking now is a good time to buy. I think with all the media speculation and the conversations about interest rates coming down later this year, these buyers who have either been on the sidelines waiting to buy property or have been monitoring the market for the last 6 to 12 months, they're seeing now as a good opportunity to buy. So if there's a 10 basis points or 20 basis points difference from where they ideally want to get to, they're willing to pay a bit more just so they can secure the right property. So I believe there is still a deep pool of buyers looking for good quality retail investments. Our Stonebridge Asia practice business has been built on over 10 years of experience in the commercial property sector, especially dealing with Asian investors. We've built a database and probably a method of educating buyers to get them to build confidence into the product they're buying. And we've built a strong level of trust and relationships with a lot of these investors we're selling our properties to. More often than not, when you're seeing the headlines, first-time investor, they're not a first-time buyer for us. We've been dealing with them for 6 months or 12 months. We've taken them to several inspections. We've taken them to seminars. We've really spent the time educating them into the commercial property sector or the property that they're interested in buying. And I think it's off the back of that trust and the relationship we've built with these buyers that we're able to, ultimately convert them into buying some of these properties that our team have on the market at the moment. Overall, we think this market remains exceptionally fluid, and our team is continually growing to service the increasing amount of demand which is coming through the Asian sector at the moment. Thank you.